Getting ready to trade this morning. What time is it? It's 5:42. Market opens at 6:30, so it's 8:42. Market opens at 9:30. Um, 5:30 just had some news announcement, and so it caused a little bit of a spike here. So right now, presently, this is pre-market high. Pre-market high is there, and then pre-market low is here. So pre-market low, which also could be known as after hours low, is right there. And then pre-market high is right there. So those are levels that you need to draw every day. And this might be adjusted, right before the market opens. Could go even higher, or it could go lower and then break through here. So um, this is the daily high. It's a horizontal line that I adjusted. I want to know where yesterday's high is. I want to know red to green is where it closed yesterday at 1 o'clock or 4 o'clock our time. So basically, it's called red to green because if price stays above this line, we're green for the day. And if it goes below this line, we're red for the day. So right now we're green for the day. That's why it's called red to green, R2G, to keep it short. Here's the daily low, daily high low. So this is the daily low, and then this is the daily high. Going to the daily chart here. I'm updating these lines here. This is, you can't see it, but there's two lines here. 450 is this level, and then this daily mid Bollinger Band, and I like to also put up there, knowing that this is trending up. So here's the daily 9, that's at that level, but it's trending up. That should be right about there. Let's check the weekly chart real quick. So I'm just really trying to update the lines that are in play for the day here. This is trending up still, but it's beginning to slow down. This is where the weekly 9 is, and it's also at a gap level. I explained that another day. Here's your weekly upper Bollinger Band, and that's trending up. All the Bollinger Band lines are dotted lines. So I know if it's a moving purple moving dotted line, it's either upper or lower Bollinger Band. Right here, lower Bollinger Band. And I know if it's a blue dotted line, it's the mid Bollinger Band. Okay. So coming into this, let's go back to the daily chart. Daily chart, I also want to know what ATR is. So I'm going to load up ATR, load ATR. And that just brings up this line here. ATR for today is 395. It hasn't changed much. If you look at the ATR, as the ATR drops, then you're going to have smaller daily moves, which means it's choppier. It does not necessarily mean you can't make money, but it does have smaller moves as the ATR moves down. As the ATR moves up, you get bigger moves in the day, which once again does not necessarily mean you'll make more money or less money. You just have to look for the right opportunities. Okay, so daily ATR is 395. So I want to know what the average range it's going to move today. So here's red to green right here. So from here to here is 396, close enough to 395. So I want to know where that level is. And I usually do a double ATR because when SPY does move quickly or for big levels, you want to know where one ATR and where two ATR is at. Okay, here's one ATR. It's pretty much the exact same price as it was before. And that's probably 2 days ago that I adjusted that level. And there's two ATR. There's no way it's going to move two ATR, but that's just today. There's no way. It's not going to do it. We're consolidating here, so it could be sort of choppy. This is definitely offering support on the daily level, but we've moved up so high. Let me get rid of this ATR here. If you look at this move up, so you had this move down, retracement, consolidated. We got back below the daily mid-Bollinger Band. Nice move down, move up. And then this is still trending down, retest of maybe the 50-ish kind of. And then it fell down here. And then since October 27th till now, it's made this nice run all the way back up. Okay. But now what we're seeing is this level right here. It peaked through the level last Friday and then Monday, Tuesday. So this is a very significant level here. If we cannot get past this level, it's going to come back down. I think it's going to come back down personally. I think this is the highest it's going to go. But we could chop through here a little bit, and then when it starts failing, after you'll find support here, you'll follow this 999, and then all of a sudden it'll break one day, and then it'll retest and break again, and then you'll find support here. You'll come down, hit this level, come up, and then you'll be trapped between the mid and the 9 for a little bit, and then once you get back below there, it could still go below the daily mid-Bollinger Band and then fire back up. But you will know that it's definitely going to start going down stronger when this line goes up and slows down and then it starts coming back down. That's when you're going to get bigger moves to the downside. So for example, it's up. You had a first break below it. You come back up, retest this. It comes back down. Get a little chop here. It closes here. Opens here. Fires up here. Comes close to the daily mid-Bollinger Band here. And then fires and goes all the way back down. I'm sure this day was a huge day for profit. I mean, huge. You should go back and take a look at this day, just for kicks. So that day, it moved $6.88. 810. But once it hit there, and then it made its way down, but it went down, it retested the 9, the green, and then it went down even further. Because once it started curling down, this was coming down. This is green crossing blue, one final retest, and then just down, down, down. 8:10, August 10th. Anyway, for shits and giggles, I'm sure I made some notes on this. Okay, let's exit that, pull this up. Home. Okay, while that's pulling up, let's go back to this now for today. If I'm looking at this now, here's red to green, here's yesterday's high. We were in sort of a 2 days in a row we gapped down pre-market. We gapped down here on yesterday. The day before, we had this big gap down, almost 1 ATR. And this is the day that you and I talked and we traded this. But now, today, we have a gap up. And so SPY is opening up a little bit higher. But this is the level that it hit July 27th of 2023 before, and so this is going to be huge resistance here, I think. So we could open up, come up, hit here, and then come back down, maybe. But we'll just have to really read the option chain. The option chain for the intraday is really going to tell us what's going to happen. So we'll just have to wait and see. So because we are gapping up, this has moved up $1.86. Okay, so when I look at that, I look at my option chain here. Today's December 23rd. No, December 6th of 2023. These are going to expire today. So between yesterday's price and today's price, there is what we have time decay. It's going to lose value overnight. Even though you can't be traded, options have a time element built into it, which makes it quite volatile. And because we're gapping up $1.86, it's gonna lose almost 2 deltas. Okay, so you're gonna lose on the puts 2 deltas. So we're gonna lose. Let's say if we're trying to look for something that is around 50 cents to trade. So the way you figure that out is you look at the delta. 37 cents is the delta, right? And the price of the option is $1.17. So we're going to go a little bit higher. We're going to go to 46. So if the option price is between $1.82 and $1.76, and I know it's gone down 2 deltas already, so we'll go $1.82, which is here, minus 46 cents times 2, because it's gone down almost 2 points. So we'll rough estimate we'll round it up to 2. 2 times 45 is 90 cents. So we're going to minus 90 cents from that. It's going to be 92. Actually, the way we should do it is this way. I know the day before, if the price opened up at the same price if SPY itself, we know the option price was like $1.82 here. Let's say it moves up, down, and before the market opens, it opens at the exact same price that it closed, okay? I know that this option price will probably lose, this option price here itself will probably lose half its value overnight because you only have 1 day left of time in this option. So this will lose half its value overnight. Okay, so the way it should be 187, 182 divided by 2 is 91, and then you're gonna minus 2 deltas. So it's gonna be almost 0. So the options I want to watch, I think I want to watch the 250, the 178, and the 117. Okay. So let's copy. I don't think these are going to lose that much value, but let's just copy these. Copy this, and I'm going to just draw this up here for you. So this is the option chain, one of the ones that we want to watch today. It closed at $1.79 right here yesterday, and the spread is like, you know, in between 182 and 178. So that's right. Coming into the open, when these print, they're going to lose a ton of value. So they're going to open right around here, around this 60-cent mark, if not less. So I'm going to right click here, low of day. I just put low of day. This is going to lose value once again because SPY gapped up. SPY moved up from here. Okay, look, it made a new pre-market high right there. So I'm going to adjust that. I'm going to move this 7 o'clock line away from it. So it moved up, which makes the puts lose value. The puts are also going to lose value because of time decay. So this option that was worth $1.79 yesterday when it closed, it's going to lose 2 deltas plus half its value approximately. So I think it's going to be down here at the 56 cents level. Okay, what that means is that for these moving averages on the 5-minute chart, this 5-minute chart is going to be coming down hard. So that tends to give, and pretty much in all, at least the first half of the day, the puts are going to be losing value. It doesn't mean we can't make 100%, because whatever, if it goes down 56 and it goes down even more to 25 cents, it can move 25 cents to 50 cents and you still make 100%. So we might take a 7 a.m. reversal, and as it goes back up, as it hits blue, you're going to take profit. Okay? But it's going to hit blue, the first blue or green it's going to hit is going to be the 2-minute blue coming down, right? Because the 2-minute is going to move faster than the 5-minute, right? So when this opens up, these will immediately start trending down. These could be trending down, they could be moving up and down. But if we take a trade, and as price action comes up to the 2-minute mid and we're long on puts, we have to take profit, because as this is trending down, as price action comes and hits it, it will find resistance and people will buy calls against, because the blue is indicating entry on calls, because we enter at blue, green and blue on the 5 and 2. Okay, so anyway, that's hopefully that makes sense. So I'm gonna load these into here, and basically this information should already be in here, whatever I did. But I want to pull these up and get these ready to trade. Okay, so I don't need this line, I don't need this line. Only thing I need to know when I'm about to watch this for the day, only thing I want to know, especially if these are losing value, I want to know where 0 is, and I want to know where the blue line is. So it doesn't have to be exactly 0, 15, 20 cents is fine. I need to know where low a day is and where this is trending down. So here, sort of the same thing. I want to know where the blue line is, because that's the most important thing to me. Kinda, I mean, you know, relatively. I want to know where the 200 is here. I want to know where the 200 is here as well. So that's another thing. So actually, let's draw that. 7 and 8. Load, steady set. Okay. Oops, that's not the right one. Load, steady set 200. Okay, so that's it, draws a red line there. So 229 and 219. So these are actually very close together. So what could happen if this does fail, this could be a midday fade later on. I mean, this is sort of big brain thinking. Okay, big brain thinking is going to be this. These lost a ton of value all the way down here. This is going to come down. These are going to come down. And we cannot buy puts until this 2-minute mid comes down, and then it begins to flatten out and then start to go back up. That would be the earliest time you can buy it. So this could set up for a double bottom reversal, and then if we get our way, then we'd want price action to come back up, and the 9, this will slowly trend down this way. This will trend down much faster, and then hopefully the green and blue will cross red, and we get that nice price action going above the highest moving average here. But the problem is that the 5-minute 200 is really close to this as well. So we'll have to just see what those levels are later on today. So anyway, that's sort of a plan. I don't want to buy, I really don't want to buy puts except for maybe at 7 a.m. and we'll go from 7 a.m. low up to green and blue and take profit. And then we'll take some profit and hopefully it'll break up and go even higher, but don't really know. So let's pull up now a call option chain here. So price is being adjusted a little bit more. Pre-market high is going up. This is looking pretty. This is trending nicely hot long. I'm not interested in shorting this whatsoever, even though I believe this is going to be. You're going to find resistance, and you could have a short here, but this is just looking way too strong. Okay, so the next one I'm going to pull up, because these are up 2 points. So this is weird option pricing here on the deltas here. I'm assuming we should trade probably this 25-cent one. So if it goes up 2 deltas, this is 2 times 38 is 76. 76, and this, if this is half its value, which is 12. 12 plus 76 is probably 87 or something like that. So this is one we want to watch. Okay, so let's copy this. Let's go to option chain. Let's paste this in. And here's what this is going to look like. You can see this option price here. It's really, really choppy here. That's because these options are so cheap. You don't get much action on them. People are not trading these, but they will be trading them today because the price is perfect for trading. So I assume these are going to open up probably around, let's say, that price. And we're going to put low a day here. So the way I would read this at the open is that price action is going to be above the 2-minute 200 here. So it can go up higher. So I want to know right now, here's 31 cents is where the 200 is. Let's go to the 5-minute chart. Oh man, look at that, dude. Duplicate. That's the profit window right there. So the profit window is from 31 to 74. If that is the case. If that's what happens. So this is going to open up here. It could find resistance at the red here. This is 2-minute mid here. So not the 2-minute mid, the 2-minute 200. So I believe price will open up above here somewhere, and these will be trending up. And you really can't, you could probably buy. You don't really want to buy puts to short it until the 2-minute mid then begins to start coming back down. Then we can buy puts. But in the beginning, I'm going to be more long biased. I want to buy calls if I wanted to trade early, unless it's the 7 o'clock reversal. And this continues to creep up little by little. So let's click here. I'm going to take this. I'm going to paste this up into, I already pasted the option into this window here. I'll delete that. Okay, so what I want to know on this side, since this is the stronger side, I know this is going to trend up. So I want the mid Bollinger Band to be down here, and I want to know where the red line is up here. Same thing here like that. So that's what I want. That's how I want to look at it in the beginning. Typically, these options will gap up or down from the night before. So one side, I want the mid Bollinger Band to be on the lower side because I think it's trending up, and that's the calls. Why? Because SPY has gapped up and it's trending up, so I want to follow the mid Bollinger Band. So that's the reason why the mid Bollinger Band is on the bottom, and it's going to gap up low a day, and it should go up even further. Puts, on the other hand, we want that the right one? No, that's not the right one. Hold on, let me find the right one here. Darn it, where is it at? Okay. On this one, we want to know where the bottom is. Since these are going to be trending down, losing value, we want to know where the mid Bollinger Band is because it's going to trend down. So hope that makes sense. And let's put this back up here. And that's basically it. That's sort of it in a nutshell. I guess pulling back the calls. As this goes up, I believe we'll find resistance up here. And maybe what will happen, as it hits this, it will reverse back down. And maybe that might be the exact same time yeah, this is a little bit close. So we'll have to see. It might be around the same time as this comes up. The calls will come up and hit here or the 5-minute 200. We'll have to just wait and see. This is all just trying to predict price action. This is going to come up, this is going to come down. Maybe they find resistance at the same time here as SPY finds resistance up here somewhere. But this can also just go straight up, 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 up too. It could be, you know, because I have no lines here. The next level is 464. We were talking about that yesterday. 444, 454, 444, 454, 464. So this is definitely a level that I need to keep an eye on. That it could be, this could be a profit target here. So we just have to wait and see. All right, well, I hope that helps explain to you how I pull up options, the ones I want to watch for the day. All right.